Hey, there's Karl Isenburg here with my home group, and I'm here with my friend JT. We're having coffee.
Good to see you, buddy.
It's so good to see you.
It's always good to see this rockstar real estate agent.
And rockstar lender.
Yeah.
We were just talking about, I have so many clients that they're calling me and saying, gosh, the market's going up.
Right.
And I've got this mortgage insurance. I don't like it.
Right.
I want to get rid of it.
Yep.
And I'm like, oh, call your lender. Well, you told me something a little bit different, which was really spot on. Somebody's gotten a loan, but they've got mortgage insurance.
Right.
The market's appreciated, so now the amount of money they owe to the amount of the value of their home, that's called what? Loan to value, right?
Correct.
Okay. So their loan to value they think is pretty good because they probably asked me for a market analysis.
Right.
And I said, hey, you've got this percentage of equity. What percentage do you need really to get rid of MI?
So if it's your existing lender, you may want to look, and you talk to Karl first to find out what the value of the home is.
Right.
But you may want to look at finding out if you can just drop the mortgage insurance in general without having to do a refinance.
Oh, so I can get rid of it without refinancing.
You do not have to refinance in order to get rid of mortgage insurance. The existing servicing company has to basically order an appraisal, which we want to talk to you first before we have them do that, because you want to be at 78% or less of value.
So servicing company, the person that my client got the loan from, the person?
No, good question. So servicing company is whoever you're mailing your payments to, because most loans get sold, right? So I may do the loan at Fairway, independent mortgage, company plug, right? Got to throw
well
that
done,
in there.
JT.
And that goes smooth. However, we sell all our loans to like 3 or 4 different servicing companies.
Got it.
So it's the person you make your payments to. But what I would suggest, Karl, they start with you to get an idea of what the value is.
Okay.
Then they call me, send me a copy of their mortgage statement. I'll let them know, look, either call the person you're mailing payments to, find out what the process is to drop MI.
Right.
Or we'll say, hey, you know what, it might make sense to refinance because we could lower your rate, lower your payment, and get rid of mortgage insurance.
So when I look at, if I have an interest rate of 5%, and interest rates on average, of course, it all depends on the person, right?
Sure.
On average are about what right now, today?
You're in the high 3s, low 4s, depending on loan type and credit score.
And so then how do you know when the right time is? You have to do the analysis, of course, but from a layman's point of view, if I'm just looking at a spread, when I hear about interest rates are X and my interest rate is at Y,
right?
What's that
Where do we
spread that
want
I should be picking up the phone?
It's usually at least a quarter point or more.
Oh, that's all?
Yeah, usually. And then it depends on how long you're going to be in that house.
Okay.
Too. So what's the payback on the return? If it costs, $2 to $3 grand in fees to refinance it.
Got it.
Right? Then how long, what's the savings that I'm getting?
Got it.
And how long am I going to be in that house?
If I'm moving to New Zealand next month, why do it?
Why do it? But if usually the payback's, anywhere from a year to a year and a half, depending on the mortgage amount and the savings. So we'll just do a free total cost analysis for them.
Okay.
And let them know, does it make sense or not?
Awesome. Well, thanks for our coffee with
great
JT.
question.
Yeah. Have a fantastic
Coffee with
day.
Karl.
There you go.